Artificial intelligence and geopolitical hopes push the S&P 500 to record highs. Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. The S&P 500 closed up roughly 1% to near 7,400. The Nasdaq jumped nearly 2% to 26,250, while the Dow Jones remained flat around 49,600. The Magnificent Seven saw mixed but mostly positive action. Tesla jumped 4%, Apple and Nvidia gained 2%, and Alphabet and Amazon rose 1%, while Microsoft and Meta dipped 1%. Information technology and communication services were the clear winning sectors today, while energy and materials ended the day as the biggest losers. Bitcoin gained nearly 2% to hover around $80,000. Gold climbed slightly to $4,700, and silver jumped almost 3% to $80. Meanwhile, West Texas Intermediate crude oil slipped 2% to roughly $97 a barrel. Advanced Micro Devices ignited the massive tech rally. The chipmaker reported a massive first-quarter revenue beat of $10 billion, which lifted the entire semiconductor supply chain and propelled the Nasdaq and S&P 500 to new records. This artificial intelligence spending boom pulls capital away from traditional software companies. Adding to the bullish momentum, the April jobs report showed the United States added 115,000 jobs. This crushed the 62,000 estimate and indicated a resilient labor market, assuring investors that the economy remains on solid footing without overheating. Finally, energy and materials sectors lagged today because crude oil prices pulled back. Investors remain cautiously optimistic about a potential diplomatic resolution to the ongoing conflict between the United States and Iran in the Strait of Hormuz, easing fears of global energy supply disruptions. The 10-year Treasury yield settled at roughly 4.4%, while the 2-year yield sat near 3.9%, maintaining a normal curve. The US dollar index remained flat at 98, and the VIX volatility index hovered near 17. This indicates that investors are locking in yields and expecting low volatility in the near term despite geopolitical tensions. The CNN Fear and Greed Index just entered the greed territory with a score of 67. This implies that optimism is returning to the market, though we have not yet reached the extreme greed levels that signal an imminent correction. Looking ahead, the market outlook remains firmly supported by the artificial intelligence infrastructure boom and steady economic activity, though any escalation in Middle East tensions or persistent inflation could challenge this momentum. In the coming week, traders will be closely watching the April U.S. Consumer Price Index release on May 12 to gauge inflation. Then, on May 13, Cisco and Alibaba will report earnings, providing crucial updates on global technology demand. Finally, U.S. retail sales data drops on May 14. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.